Welcome to Trading Lounge and the US indices for Monday, August the 29th. I just thought I'd quickly flick through the sectors here as well, just to sort of point out a few little things in that from the top here, just with the healthcare, just from the top here, we've got 1, 2, 3, 4, 5 here, and then we've got a correction and we've got this move here. So we've got this move down here as a corrective move. So that means whatever happens over here is part of a larger correction. Okay, so I think that's pretty important to start with, because we will be making new lows here across all markets, and they will be calling that a recession. But it's good to understand, the distance it can go, so to speak. For us, they're all tossing a coin to see if we're in a recession, and is a recession, to negative GDPs or something of that nature. Well, we know it started here, and we know it's going to end over here. That's the important point. With the healthcare here, it's very clear to see that this move up here is an A and a B and a C wave up here. This is corrective. Now, I'm thinking that across the markets, we're going to be coming down and then up and then down again. The only mistake that I can make is that the market can come down at this point. And that means that this ABC here, and this is for all markets, including the S&P and the NASDAQ and everything. So it could be like that. I'm pretty sure though that we're going to be looking at, I've got more weight in, if you ask me personally, Pete, what do you really think? I'm thinking this. I'm thinking that we've got a situation where we're going to be coming down and then going up and then coming down. And the reason for that is there's stocks like Nvidia, Berkshire Hathaway, Apple, that have got 5 waves up. I was just looking at the mining sector over here for a moment, and this has also got 1 and 2 here, and then 1, 2, 3, 4, 5 for the 3rd wave, and the 4th wave, and the 5th wave. And this is what we were sort of looking for on the S&P, but it just didn't come about. But so we're left with 3 waves up for the S&P. So in this case, we've got 5 waves here. I mean, could this be down for 1 here, an A wave and a B wave and a C wave up here? Possibly, but it's sort of, stretching it a little bit. So I think the A, the B, and the C wave, for that reason of many markets having, not many, but a handful have got 5 waves going up there. But in no doubt, we're basically halfway through a recession, if you want to call it whatever you want to call it. I just call it another correction. So the industrial sector as well. I've got the A, the B, and the C here. It's all pretty clear to me. And then we've got the A, the B, coming back for the B, and the C wave over here, then coming down. But we have to make, caution that we can just come straight down. The same with the tech sector here. So the NASDAQ basically in that regard. But this is the ETF here, or one of them, XLK. Have I got the? Just looking to see if I've got the. It doesn't matter. I was looking for the triple Q. It doesn't matter. So basically, we're going to be, we're either going to be coming straight down here, or we're going to be coming down deep into here and then up and then down again. Okay, so that's the tech sector. The consumers discretionaries here, once again, coming down and then up and then down again. Because the other reason too that I think we've got another leg over here is that when I look at this pattern here and I compare the size of it to this one here, this one's humongous compared to this one. There are stocks like Apple that have moved way up here, so fair enough, and the S&P has rallied 50% or whatever it is, so it's possible, but the time of it, the size of it doesn't really rebalance this here. Not that it has to, but it's something that we normally sort of look for. So there are reasons for this here, but you know, when we were trading up here on the S&P, I mentioned that don't get lost that we're in a bull run. Yes, we will look at all the bullish patterns to the upside, and they've been negated now. But what I said going up here was don't get lost in the bull. Don't get lost as being a bull in all of this, you know, because it can turn. And now it is turning, and now it's coming down here, and I'm saying don't get lost in the fact that it can come all the way down straight through here, because it could turn here first. So we have to be unemotional, and we have to be, you know, we have to count our little waves, and, you know, we have to do the best we can. Yes, we will make mistakes. Yes, there will be blind spots at times. We don't know what's going on. But, you know, in time, if we're a little bit patient, we'll get it reasonably right. So this is what we've got to watch out for. And this will be the same for the finance sector as well. The banks have had 3 moves up here. So all the banks are corrective. That, you know, we still need this leg over here. We still need this over here. But does it come from here or does it come from over here? You know, that's the point. So yeah, everything's really in the same boat. Now we're over at the S&P here, so the same thing again. It's 8 o'clock, so it's just dropped. So the same thing here again as well. We've been looking at it we've been looking at it in different ways, really, haven't we? We've been looking first of all in the bullish sense, but the bullish sense, we're looking at this as a wave 4 pullback. So looking at it as a 38.2% retracement level, and now it's clearly through that 38.2% retracement level. So we can eliminate that count. Now we've got this count with the A, the B, and the C here. The other point with this is that, as I mentioned, we can put the A wave here, the B wave over here, and the C wave over here, and this B wave here, and we just come straight down from, you know, from that level, and we start the next leg here. This leg here, you know, basically becomes this leg over here. For that we go down, you know, quite a way in that space. So we have been looking at that in terms of so anyway, before I go to that bearish count, I'll just put Humpty Dumpty back together again here. So yeah, just before we go to that bigger bearish count here, we're basically, from last week, we're looking for the A wave and the B wave and the C wave down. Now the B wave up in stocks, some of them reached their 50-60%, some of them sort of didn't. Yeah, but you know, it all went down, everything went down with the Jackson Hole, and yeah, and that's the way it is. So now wave B to wave C here, we're going to be counting 5 waves in that space. That's our thing. Obviously the 4,000 is a nice support, so we'll probably see that as support. But we're just going to go and have a look at I think it was on the 50k tick chart here, where we had that bigger bearish count. So, you know, it's pulled right up into the box quite nicely here as a 50-60% retracement level from the top to the bottom over to here. So an A and a B and a C up here, we can come, you know, down into the 3,000, whatever length this is here. We can look at wave A here being roughly the same length as that. So we can put that here, grab a bit of that and take that, put that there. So that brings us, you know, closer to the 3,000. I'd always had the 3.2 as a bit of a target sort of area, but I don't really worry about target. I just do general targets like this in the bigger picture, because you know, you just have to count. At the end of the day, you could be wildly wrong, and you just have to count the waves, that's all. But it's good, you know, it's interesting having a look at the bigger picture. But in one way or another, this market move up here is corrective. We will be making a new low. We will be going into recession, if you want to call it that. But this is what we're going into at this particular point in time. So yeah, we can look at this on the 10K tick chart. I think we've started to look at it here. So I'll be looking, we'll keep a track on it. You know, we'll be looking at it as 1 and 2 to here, and then 3, 4, 5 for 1 here, and then back for 2 here, and then down for the third wave here. Now, will this happen? I don't know, but basically what we'll do is we need to, you know, if there's 2 counts, we need to track them. And the 2 counts we have at the moment are both bearish down to the 3938 area. Okay, so that's that. Okay, going back to our other count, so going to the daily chart here, I think that we're on the, so looking at trying to figure this out down here, we're looking at 5K tick. I think we were working on. So yeah, we're basically working on this one. So we were looking down for the A wave, up for the B wave here. I think we're a bit shy of that, weren't we? But we had a nice 1, 2, 3, 4, 5 to finish that off there in that. So that was good. But okay, we hit the 50%, you know. I know some folks have got this as a wave 4 here, going down for a wave 5, but the problem with that is that there's a lot of stocks that are pulled back up to 61.8%. So yeah, I mean, yeah, just be mindful of that, that's all. So yeah, we're coming down here to this. We're looking at all of this as 1, 2, 3, 4, 5 for wave 1 and 2 here. Now, this is quite a big, you know, when we look at this structure here for a moment, we look at this and we go, okay, that's wave 1 and 2, and the extensions in wave 3. Because the extensions in wave 3, then wave 1 and wave 5 will be roughly the same length with a pinch of salt. Now, out of these structures, out of wave 1, 3 and 5, one of them is going to have the extension in it. In stocks, it's mostly wave 3. In commodities, it's quite often wave 5 and so on. But this here is counted as 5 waves down, and it very well could be the extension in wave 1 here. It's not out of reach. When we look at this, let's go to 100. It's I don't think there's anything on the 1,000, so let's go to the 100. So that's our B wave up there, and we're looking down. We're looking at 1, 2, 3, 4, and 5 coming down here. So yeah, it should finish off shortly. The futures will come back and cover that gap on some sort of bounce at that point. What I think that we should be interested in next is that from the top to 4,000, the 50-60% back here for wave C of 2 is here. Now, it may not reach that high, you know. It depends on how it sort of sinks into this here. It might just come back up to 450, 480, it doesn't really matter. We just need to count the waves again. But this correction over here is really what we're looking at. Now, we went through this exercise that we're going to go through here. We've just been through that with this move here, which was a bit laborious and took a while, you know, took 1, 2, 3 days or something. So, you know, this wave 2s are normally simple and sharp. So we'll see how that plays out. The other thing that can sort of happen as well is that, you know, because we're looking at 1 here, 2 here, 3 here, 4 here, and 5 coming down here for this. So that's one way to get 5 waves. The other way is that it could be that we have wave 1 here, 2 here, just the same. And this next leg here, this one here, I don't think so in this case, can also be wave 1 and 2 as well. So we're getting a series of wave 1s and 2s, and that way it doesn't kind of come back to this area here. So just sort of keeping an eye on that. When I have if I break this down here on Apple, which is, you know, one of the main stocks for all of this, we've counted it down as 1, 2, 1, 2, 3, 4, 5 for the third, fourth, for 1 and 2 here, 1, 2. So it's, you know, all the corrections have been pretty minimal. And when this opens, we expect it to, because it's not finished here, 1, 2, it's in its like third wave here. So it's going to be dropping down maybe to the 160 or something like that. But then it should shore up at that point. And then we'll be looking for the ABC. So they're all a little bit different. But what I'm suggesting, if you're trying to find a way into this market, this is really what we have to wait for here. We have to wait for some counter trend of this move here. Now there will be sellers, you know, that will come in late for all of this. You know, you'll probably get trapped, but yeah. So, but yeah. So I'm counting it down as five waves down into the 4,000, and looking for an ABC pattern. And you know, the thing is that we can short it in the box, or the safe trade will be shorting it under the B wave here, or sometimes we can put a line through here, and if that becomes the resistance, then we can short it at that point there as well. But that's about it in a nutshell, and hopefully we can catch the next one down as wave 3 coming down. Now this, like I said, wave 1 may have the extension in it, and this 4,000 may end up holding the market quite nicely, so we may end up seeing 4 and 5 just coming down to 3, 9, and that's sort of the end of it at that point. So anyway, we'll just count the waves and we'll see how we go with it, but that's kind of where we're at with that. So just quickly now for the other markets, the NASDAQ's the same thing as well, the ABC coming back down, so 12,000 will be a nice supporting area through here. Once again, wave B can be over here, and we could have a deeper move coming down, so it's something that we have to assess and make decisions along the way about all of that, to see how it stretches all out. But when you look at this, you know, if we're going to get this picture here, this other big leg down here, then you can see this leg here, it's quite big, isn't it? So we would get the size of that with 5 waves over here or from here. So there's lots of opportunities within all of this. So don't think that you're missing anything if you haven't caught this wave B here. It happened pretty quickly. So it was a bit, you know, it was a bit tricky. Not everybody would have caught it. So, but the markets are always there. So I'm just going to cut through to the 100 tick here and just do the same as well. So let's just bring this in a bit more data here. So from the B wave top up here, hopefully you were short under the 13,000, at least somewhere in there, you know. But we've got 1 and 2 and 3 and 4 here, then 1, 2, 3, 4 and 5. So this is going to finish off here somewhere. It will probably stick to the 500 here for a while. There might be more downside, but if I was going to trade this here, then I would be looking for a classic trading levels pattern here. So what you would need here is you would need to see it back above the level at this point. You could short it under here, see how you go with that, but otherwise looking for some sort of move above the level, and then finding you know, finding something that you can work with on the downside here. Just be patient and let it go, and you'll get it at that point. And the other markets are, oops, daisy, I need to put that one there and just get rid of that one there. So the Russell's the same as well. We're looking for, it's opened on the Asian side now, so we've got 1 and 2 and 3 and 4 and 5 coming down here. So once again, in this case, we'll also be looking for a rally back up. I think there's 1, 2, 3. There could be another one more move down here for that as well, but we're not far off that finishing. So yeah, 1, 2. There could be probably one more move down through here as well. So just a bit of short covering there. Yeah, but once again, we're looking for this A, B, and C wave coming into play for wave 2. That's what we're looking at. And oops, leave that there. And the DJ will be the same. So we've been counting this down here, and then looking for the ABC. And then we've got 1 and 2 and 3 and 4 and 5. So we're pretty close to having that sorted there. You know, the Friday, the momentum from Friday will follow through on the Monday. So it's quite possible for this to you know, to you know, cover its gap here and move down a bit and you know, have a little bit more in all of this. But there will be this wave 2 here somewhere, right? So that's what we're looking for. It might not be as big as I'm drawing it here, but it'll be there somewhere. That was just possible wave 4 area. So yeah, just thinking of anything I can add to that. No, I think that's about it really. So yeah, the next short trade will be shorting, the safe short trade will be wave B at this point. Alrighty, thanks for tuning in. Cheers.